Borston. Look, everybody's a winner. Like a Peace Guy,
Yeah,
that's higher in the after-hour session because it got what it needed. Netflix shareholders like Tim breathing a sigh of relief here. Netflix shares popping in the after-hours. A bigger spend, debt-free, right, on content here. Buyback, Tom?
I've been wrong before. I haven't been wrong on live TV like that before. That explains why the stock is much higher, though. The market got it right.
You got the news just wasn't out yet. None of us had seen it.
No.
So I mean, the direction on the stock is fascinating. What's interesting is that both companies win here, and that's fascinating. This also comes on within the last 24 hours. We've gotten earnings out of Warner Brothers. We've got earnings out of Paramount. Paramount's TV business looks okay. I mean, in other words, that's the profitable part of that business. And this is a fascinating time in media. I think some of the parts really says it goes higher.
The problematic part here for Paramount is now 80% of the EBITDA of a combined Warner Paramount is going to come from cable networks. And with Warner's earnings just announced today, their cable networks declined in EBITDA by 27% in the fourth quarter. And that looks like it's accelerating because it was 21% for the year over year, 24 to 25. That means that Paramount, with all the leverage it's going to have and it declines in 80% of its business, has a lot of work to do. And that's a very different model, I must say, with my Versant hat on than Versant, with very little debt and a lot of capacity to be able to invest in the growth of these great franchises like CNBC. Stark contrast there.
Julia's got some more details here. Julia?
Yeah, I just want to note, Melissa, that as part of the deal that Paramount Skydance has offered, they will be paying Netflix's termination fee. So originally, it would have been Warner Brothers Discovery would be required to pay $2.8 billion to Netflix to terminate the merger. But as part of its increased offer, going from $30 to $31 per share, Paramount also said, and in addition to increasing our offer, we will also pay that $2.8 billion to Netflix. So Warner Brothers no longer has to pay that. There's another termination fee that's worth noting. It's a termination fee that Paramount Skydance would have to pay if, for regulatory reasons, their deal was not approved. That's a $7 billion termination fee that would also be on the table should this deal not go through.
Except that David Ellison was at the State of the Union, right, Julia? I mean...
Well, that's...
I don't know.
Well, we have to note here that Sarandos was at the White House today. So you have to wonder what kinds of conversations Sarandos had with White House staffers that made him think maybe it wasn't worth fighting this or increasing their offer financially when they have these regulatory questions ahead.
Julia, thank you. Julia Borston. What does Netflix's path, Tom, look ahead now that it is free from this? What does it do? Well,
Netflix was on a great growth trajectory. It is far ahead of everybody else. Disney was number 2. Their streaming EBITDA is over 7 times what Disney's is. So they have a great growth trajectory. They didn't need $60 billion of debt and to be highly leveraged given those advantages. I really think the bigger issue for Netflix is how it's going to handle AI-generated content as it gets easier and easier for cheap but professional-looking content to gain viewership traction, and how does all the long-form programming that they're known for contend against that? And the fact that they don't have to make a $80 billion plus investment in Warner that would have been in long-form programming, how much does that free them up to really deal with what looks like the big competitive issues for traditional television ahead? So I think Netflix path is great going ahead.
So now that Netflix remains pure streaming, Tom, how does that sort of translate through to the rest of the sector? Does it make Disney look weaker, for instance, now that Netflix is free and is charting its course straight ahead?
I think Disney clearly was a winner during this process of other companies being bogged down, and they were probably rooting this would go on for a while and bog those companies down. Now that Netflix has been unleashed from those issues, I think Disney has its own issues in terms of how well it is able to drive viewership, engagement, and the advertising revenue it needs to drive that. Paramount is does have some antitrust issues. What you were saying before is true, I think, in terms of U.S. regulators and how the Trump White House might be viewing this. But let's not forget about European regulators. Let's not forget about the fact that they are consolidating 2 movie studios into 1. They are taking 2 news organizations down to 1. They are taking 2 streaming services and probably bringing it down to 1. And all that has competitive issues that may create issues with European regulators. So that's part of the story is not over.